Is this turning into a conundrum? On the one hand, you got companies like Apple saying these worries are overstated, and then we have a slew of other companies saying otherwise. We've got Bridgewater today essentially turning tail on China. After obsessing on Greece for so long, where does China rank on your radar right now, and how?
So it ranks high because it is slowing, and because it's slowing, all sorts of issues are coming to the surface, in particular the financial excesses. I am not a buyer call that this is a crash. I think China has the ability to control its soft landing, but China is no longer a locomotive of global growth, and that has implications for companies and has implications for the commodities markets.
I was just going to say, Mohammed, is that the message you're getting out of commodities? Is it the China slowdown, or do you think they're trading more off the idea that the Federal Reserve is inching closer to an interest rate hike, and that's strengthening the dollar?
I think both. I think there is a slowdown. The IMF revised down its projections. If you look at the BRICS, 4 of the 5 countries are having problems. Brazil is having problems, Russia, China, and South Africa. Only India is looking good. So if you look around the world, there is no longer a dynamic source of growth. That's one issue. And the second issue is the market is starting to price in the likelihood, the high likelihood that the Fed will move this year. So both of these issues are having an impact on the commodities market, Sarah.
So, Mohammed, with this global backdrop, you have this conundrum where the U.S. is the best house again, in a bad neighborhood, at least economically. So what does that mean for U.S. assets, stocks, bonds, the dollar? Do you still want to be there because it's actually seeing better growth, or do you want to be where the central banks are in easy policy mode?
So a few things. One is if you're betting on fundamentals, and the market is telling you this today yet again, differentiation matters a great deal. You had a great discussion earlier about how companies are run, how an Under Armour is doing so well. So differentiation is going to be an absolute key issue for the stock market. It's no longer betting that liquidity, be it from central banks or be it from companies putting money back into the equity market through buybacks or dividends. That's no longer the theme. It's going to be good old-fashioned fundamentals and differentiation. When you go globally, it really does matter which market you're trading in. So if you're in the foreign exchange market, central bank differentiation is going to matter a great deal. This divergent central bank is going to be the theme pushing not just the interest rate market, but the currency market too.
You know, Mohammed, it's very rare that somebody says something that really stands out, even maybe 6 or 7 weeks later. You were quoted as suggesting that as far as you were concerned, and I think it was with your own personal money, you felt that public markets had been overinflated by central banks, and therefore, if I'm quoting you correctly, for your decision, your personal decision, you were not invested in public markets. And for that, I would take to mean the stock market and the bond market, and you were looking elsewhere, I think the inference was, to private equity. Can you talk us through where you are and the judgment that you're making? Because you are exceptionally well connected here. When you say something, people should listen.
So you're kind. I'm not sure people listen. But the point I was making is become more barbelled, okay? Don't chase prices where central banks are highly manipulating markets. And that is in the public markets. So take some of the money that you have in the public markets and barbell it. Some in cash to give you optionality on likely corrections down the road, and some into higher risk but less liquid opportunities because central banks cannot reach those as easily. So my message was barbell more, exit public markets that have become very crowded and very manipulated by central banks, and wait for the optionality, the resilience that you get here, but also don't give up on some really exciting opportunities that are happening in the startup world, in the private equity world. I mean, there's a lot going on, especially in tech.